Hello everyone and welcome to Nordnet. My name is Roger. Today we are joined by Mr. Simon Bolton, the CEO of Envipco, and Bob Lincoln, the president of Envipco. It's important to know that this session is intended solely on informational purposes. It should not be considered investment advice. Our aim is to dig deeper into and provide deeper insights into the Envipco company and of course its industry. First of all, Simon and Bob will go through a couple of slides concerning the recently published Q3 report. Thereafter, we will conclude the session with some prepared questions. So, Simon and Bob, welcome.
Yep, Roger, thanks very much. Very nice to be here. Maybe we can introduce ourselves a little bit first. So, Simon Bolton, CEO of Envipco. Joined Envipco beginning of 2020. And really, it's a pleasure to be here and give a brief introduction about our company.
Bob Lincoln, president of the company, head up the U.S. operation and work heavily with the European team on business development. Happy to be here.
Okay, great. Roger, maybe we'll go through a couple of slides first.
Yeah, please.
Great. So obviously first time we've been with Nordnet. So just give a few slides and then we'll do a Q&A. So the first thing to say is that we are a recycling technology business and our aim is to create a cleaner world for future generations. And really, we sell machines, software and services that enable the recovery of beverage containers, particularly where you have schemes where you, in different countries, where you have a deposit, very much like here in Norway, and that encourages consumers to take back the beverage container and to get their deposit back. And this really, we see this now as a huge trend, particularly in Europe, and we supply the hardware and software to support the automation of those schemes. Our aim is also to use really clear strategies to drive growth and value in the business. The first thing is we are focused on growth markets, and we'll talk about those. I'll talk about those a little bit later. But there is a huge wave of growth and greenfield countries in Europe as they adopt these deposit return schemes to capture the beverage containers, really being pushed by EU legislation. Bob will talk a little bit about our innovative and superior products. Also our approach with customers, which is to work with customers, many of whom this is the first time they've thought about deposit return schemes. They're unsure what to do. So we really look to tailor our solutions to really fit their needs. Nothing's going to happen without ambitious and talented people. And it's a pleasure that we have a fantastic team in Envipco, nearly now 400 people who are working on these strategies to that vision. And we have real pleasure to present our Q3 report to the market yesterday, and we'll continue to improve performance. Just a bit about the background of the company. We're a 40-year business, so it originally started in the US, now very much headquartered in Europe with very strong businesses both in the US and in Europe. We're listed. Main market in Amsterdam and also Oslo growth market. And really, we now see a fantastic growth journey ahead of us as we provide our goods and services into these markets. How big is that? Well, by industry estimates, for these countries in Europe and North America to fully adopt these so-called deposit return schemes, we're going to need about 200,000 units. And the average price of one of these reverse vending machines that you see in retail stores here in Norway is about 20,000 euros. So that's a 4 billion euro market. And again, this is being pushed by EU legislation, principally the Single-Use Plastics Directive, which gives clear targets for the recovery and reuse of that material to governments, to the beverage industry, and also responsibility for retailers to take back their packaging. And this is really driving growth in lots of different markets. And this slide just says, I won't go through those country markets in detail, but we have waves of a wave of growth coming as all of those countries adopt deposit return schemes, and with billions of containers in each of those markets, they need to automate that. And that's where we come in to provide those goods and services. And maybe with a little bit more detail on that, now over to Bob.
Yes, I mean, we are in a highly competitive space. These are high ASP technologies and big capital investments for our customers. And we're always asked, why are you winning? And it's really across 4 disciplines. One is, we're a technology company, and we have a very wide portfolio of equipment that can basically meet any retailer's need, regardless of the size of store. We go from very small convenience stores all the way up to hypermarkets. So the technology is quite important. We also have the proof point of working with some of the world's largest retailers. Yeah. So we've done this. In some cases, we've had very large retailers with us for 20 plus years. The other key factor is production scale and capacity. So when you're dealing with an entire country requiring this technology, you have to prove to the customer that you can actually deliver thousands of machines. And so we have that production capacity. And I would argue we're one of 2 companies in the space that actually can say that. And lastly, which Simon's already pointed out, and is a very important aspect of our competitive approach, is we deal with customers in a very collaborative way. We want to understand exactly how they're going to handle this waste stream, frankly, that's coming into the front end of their store. And we work from that to determine the best fit of the technology. And then we pilot in collaboration with the retailers so that we can prove that we're meeting their needs. And when we get to the point of an RFP, we feel like we've already done a lot of work to position ourselves well to win it. As far as the technology, as I said, it's broad. We go from left to right, from small store, small container storage requirements, all the way up to very large platforms. Our quantum platform holds 20,000 plus containers. It's designed to go into recycling centers. It's bulk feed. It's incredibly fast. And then we also have a backroom system platform that allows containers to be moved anywhere we want into large accumulation storage solutions. So the range allows us to serve any one customer in any possible configuration.
Great. Thanks, Bob. Just a real a few brief points about Q3. So we released the Q3 numbers yesterday, and we've had great meetings yesterday and going on to today to discuss our highlights. Really, it's a record quarter for the business. So revenues are up over 25 million, which is a 49% increase versus a year ago. I've explained some of the background of what's driving that growth, principally European markets adopting deposit return schemes to recover beverage containers and the need for our equipment to automate that process. So European revenues, nearly 17 million. So that's 133% growth versus a year ago. Great growth in Greece through recycling centers and also new markets of Hungary and Romania. This high revenue with quarter-on-quarter improvement in gross profit margin means a gross profit of 8.8 is up 67% year on year, and with solid management of OPEX and leverage now of operating costs as we grow, gives us an all-time high EBITDA delivered in the quarter of 3.8 million, EBITDA margin of 15.2%, and nearly 8 times EBITDA from a year ago. So really fantastic proof point that we're on this growth journey, and certainly very exciting journey ahead. Roger.
Yeah, thank you so much for the introduction of yourself and
Great.
Envipco. This is the first time you are here.
I am.
I have prepared some questions, 7 in total, and I will. Yeah, the first one I hand to you,
Sure.
Simon. So, considering the challenges smaller companies often face in accessing capital markets, so what strategies has Envipco adopted to secure necessary financing and effectively manage financial risks?
Yep.
Ensuring stability and growth.
Yeah, no, look, good question. We feel really good about, the coming quarters. We've got now positive operational profit, and we've got really good working capital management, which means we have the resources we need. As we saw from the slide, we've got some really big growth opportunities ahead of us. And we keep an open mind. We're obviously listed. We've had several successful private placements, so that's an opportunity to raise capital if we need it in the future. And also the debt markets. Again, we've had several successful instances where we've tapped the debt markets for capital. So those both are open to us.
So, and Bob, understanding the strategic planning is essential for long-term success. Can you share some insights into some of the company's long-term strategic successes and, of course, failures as well, along with the key lessons learned from these experiences?
Yes, I mean, strategy is critically important because these are very large markets and we can't tackle every single one at once. So our primary strategy is to target greenfield markets where we come into the market on an even footing and can basically make our case that they should select us for their technology provider. In terms of lessons learned on things that we took a risk on that didn't really work out, Latvia, early in our planning for Europe, we decided that we would respond to a request for bid for all of Latvia. And we felt like, because we had 40 years experience and we're very deep in our understanding of deposit return systems, big business in the U.S., we could compete for that. We didn't win it, and it proved to us that we got to go a lot deeper. Yeah. We got to go a lot deeper in development activities earlier, understand the stakeholder groups earlier, to position ourselves to win. It's not good enough to just respond to an RFP. You got to do a lot of upfront work, and that's what we're doing now. And we're seeing a lot of the success of that strategy.
Yeah.
So, touching up on competitive advantages. Also, how do you plan to adapt to changing trends? I guess there are your competitors. Tomra is maybe the largest competitor.
Yeah.
So how do you remain competitive and relevant?
Well, we're a technology company, so we have a pretty deep bench on R&D and very professional folks who track, all trends that could possibly interfere with our business model. But we stay so close to our customer set that we get a lot of trend information where retail wants to go. I mean, that's our primary application. So we have a big feedback loop on technology and wishes going forward from that customer group. And of course, we interact with hundreds of thousands of consumers. Yeah. So we very much are in alignment with understanding their wishes and needs. So within both of those camps, an R&D team that can follow mega trends and important trends, and the commercial side, we feel we're in good position to address any risks that may come up.
And Simon, reflecting on the importance of human resources.
Sure.
It's the main driver for success for any company, yes. I guess. So what strategies are in place for employee development and retention?
No, it's great. You saw, Roger, on our strategies. It's to, develop, attract, develop and retain talented and ambitious people. And absolutely, I think the growth that is coming through the business is because of the hard efforts of the whole team. I think a few things. First of all, we're very clear that that's a priority for our business. So as an executive management team, we take that very seriously. We also make sure that we're very clear in the organization. So roles and responsibilities, that's important. It helps that we're a small business. So it's exciting. We're on a growth journey. So and also the sort of things we're doing in terms of recycling technology, it makes people feel really good about working for Envipco. They're helping the environmental problem. And also they can work with colleagues from all different regions, again, in a growth way. We have specific development programs. So we move people around, we give different development projects to people. And also we're lucky enough, we still are a 40-year-old business. So we have this high growth element. Also, we have, fantastic colleagues who have been with us, 30 years, nearly their whole career. So we have people who started today and we have people who have been here 30 years. And that blending of experience and talent, I think, gives us a really, a real edge. And that really, supercharges our growth.
Yeah. And I have a couple of questions left. Stable and healthy business relationships, especially with suppliers and partners, they are key to operational success. Could you discuss how these relationships are managed and maintained at Envipco?
Yeah, definitely. As I said, we are, we're a medium-sized business. So this is not something that is delegated to, customer service folk or just sales folk. Myself, Bob, the rest of the executive management team, the engineers, the production folk, we all get involved with working with vendors, working with partners, working with customers. So like Bob said, on the product side, our engineers interact with customers, understand their issues, and understand how we can make our products better and better. So we're exposed to those relationships. Second thing is we know that's important. Okay, we're an assembly operation, so really our suppliers are critical at delivering on time the quality and the quantity of products, parts that we need to be able to deliver to our customers. So we've built up an international team that work with us, and work with the management team and all the production folk to make sure that we have the right suppliers in place. And on the customer side, making sure we have the right partners and working with the customers in a very intense way to deliver them the solutions that they need. And often that means being in the market, like Bob has said, way before the tender comes out or the RFP comes out, to really understand what's going on in that market, to understand some of the challenges that those customers have, such that we can develop that relationship. So it's important we spend time on it. And again, because we're a small, nimble business, it's something that we're all exposed to.
My final question I'm open for, it's all about risk management, because it is essential for the resilience of a company. So maybe you both can elaborate on this, but what are the biggest risks currently facing your company?
Sure.
And what strategies are being implemented to mitigate them?
Yeah, absolutely. Look, we're a medium-sized, fast-growth business. So management of risk is really important. And that's at the board level, at the executive management team, and all of our operational teams. I think when we've spoken with investors and over the last couple of days, there's a few points have come up. The first one is, what about market risk? Our market is driven by legislation. We wish it was, but sometimes green initiatives or recycling isn't maybe at the top of every politician's list. And so how are we mitigating that? I think the first thing is we are making sure that we know what's going on in the market. That's all the markets. We get in early so we can understand the dynamics. And I think we're broadening our revenue stream. So an example, 3 years ago, 90% of our business just came from the US, 10% from 2 countries in Europe. Now we have 2/3 of our business is coming from Europe, and we have very strong and stable and flourishing US business, but we also have 9 European countries which are revenue generating, so spreading the risk. I think the second point we hear is, okay, that's great, big growth, can you deliver? Okay, can you actually put the machines in the field and support your customers? And so what we've done there is we've increased production capacity. So we've announced about a year ago opening a new Romanian factory. That's the guys there have done a great job. That's fully on stream. We've relocated and expanding our German facility. We've even set up an assembly operation in Greece. So we've increased our manufacturing footprint in addition to developing the US plant, and within that, the supply chain, so that we have multiple suppliers with good relationships, of course, that can feed that. I think the third thing is, technological risk. What about our products? And to Bob's point earlier, we're continually taking feedback, testing, thinking about new innovative ways that we can do on our technology to make sure that it's easier to use, more reliable, easier to install, and more productive. Then I think the fourth risk, which is, I guess, everything from cyber to financial that we've talked about. And that's something that as a board and as executive team, we monitor and we place close attention to. We have specific mitigating actions depending on what those specific risks are. I don't know, Bob, anything else to add?
The only thing I would add is, these are large customers, and you have large customer risk if you don't stay very close to them. And so we are very disciplined on reviewing our relationship with retailers on a minimum of a quarterly basis, how we're doing on service response times, reliability, consumer satisfaction. So if we stay close and we, again, collaborate and build a relationship with our partners, that mitigates the risk quite a bit. But when you're dealing with accounts that may have 1,000 machines, you got to hold on to that account.
Yeah, exactly.
So that's another aspect.
Yeah, so it's all down to building trust.
Building trust.
Yeah,
that's right.
Okay, Simon and Bob, thank you, both of you.
Pleasure. Thank you, Roger.
For providing so deep insight into Envipco, your business and operations. So, and we talk again.
Okay.
Very good.
Thank you very much.
Thanks for having us.
Thank you.